Hey everybody, welcome back to 5 Minute Financial Markets. Today was a great reminder that fear and greed rule the markets. And to be a successful trader, you have to keep your emotions out of your decisions. Or as Warren Buffett says, be greedy when others are fearful, be fearful when others are greedy. Look at what happened today on the 1 minute chart. The day started off normal enough, and then right here around 8 a.m. Pacific time, we had a pretty sharp sell-off for about 30 minutes. We lost about a full percent in 30 minutes. Now, a lot of traders would see that and start to panic. That's where fear takes over and pushes you to make poor decisions. But if you can keep your emotions in check and calmly look at what's happening, you can see that there are opportunities in any sell-off or any breakout. So let's zoom in right here on this bottom candle. So right here at 8:20 in the morning, that's where the market bottomed. And if you were paying attention, you would have known this was a bottom because we have a very clear hammer candle here. See the long wick at the bottom and the small body at the top. That's called a hammer candle. That tends to show a reversal. Now you can have a hammer candle that doesn't actually reverse, but a hammer candle coupled with much larger volume is a very good sign that the market has found a bottom. It basically means that we've gotten down to a price where a lot of demand has come in, a lot of people are willing to pay that price, and they're coming in and pushing the market back up. So this candle opened up here, traded down to 393 and change, and then reversed back up. If you were paying attention, you could have made a nice little entry there and had a nice profit because the market ran all the way from 393 up to 396. I wound up buying some calls right here, some same-day calls that expired today, but as I've talked about in the past, $5 increments are key levels of support and resistance on the SPY, so I wound up selling right here just before it hit 395. Still made about a 60% profit on that trade. There's an old saying in trading, don't try to catch a falling knife. That's absolutely correct. You wouldn't want to try to catch it here or here or here. But when you've seen that that knife has hit the ground and is bouncing back up, it might be worth taking a little reach for it, provided you have a plan to let go of that knife if it keeps falling lower. And by that I mean have a stop loss. In case it gets below that previous low, you can exit your position with a minimal loss. Always practice good risk management. Aside from that intraday roller coaster, the trading day was pretty uneventful. We wound up finishing down 2/3 of a dollar, about a 1/6 of a percent, so not much movement overall. Taking a look at the daily SPY chart, we're still inside this upward trending parallel channel. It's down in the bottom half, solidly down in the bottom half, so I wound up adding this second smaller parallel channel in there so we can see when it hits the midpoint, which it looks like it basically hit that midpoint today and then rejected up higher. So I think over the next 3 days, we're going to really have a good sense of where this market's headed. Whether we jump back up into this top half of the channel and head up higher to what I've said many times is our goal of 408 to 410, or do we continue lower and have to reevaluate our case for a bullish market move? And we're going to know in the next few days because of the news that's coming out over those Wednesday, Thursday, Friday. So tomorrow, Wednesday morning, 10:30 Pacific, Fed Chair Jerome Powell will be speaking and should be giving an indication of where the Fed is heading, what they're thinking of for the next rate hike, as well as the next several that come after that. If his speech gives a hawkish tone, the market's probably heading lower. If his speech gives more of a dovish tone, the market could rip. Friday morning before the bell, we've got the non-farm payrolls number, and that is definitely going to be a market mover. So I would say by the opening bell on Friday, we should have a very good sense of whether we're heading higher or lower. Let's take a look at silver. Silver, as we talked about yesterday, sold off, found support at the middle of this upward trending channel. Today it rejected back off of that and came back up firmly in the top half of this channel. You see it entered this big supply zone, which I talked about yesterday. That's this shaded rectangle, and then wound up bouncing back to close right at the bottom of this rectangle. Now this area is shaded because historically over the last few years, this has been an area where there's been a lot of demand when price has gotten down into this area. You can see all these pivots and reversals that have happened over the last few years. And then earlier this year, there was just a lot of chop back and forth. So a lot of trading, a lot of entries and exits of positions here. Now that it broke through and is coming back up from the downside, there's going to be a lot of supply here, which is going to be resistance in price. If it can get through this shaded area, it's got a lot of room to run up to this $25 area. Finally, as we've talked about, the VIX is kind of in no man's land right now. I mentioned that we were very oversold here a few days ago, sitting on this support line, and we did bounce back up to that 22 previous support level, and now it's kind of just sitting here trying to decide if it wants to head lower, which would be good for the markets, or head higher, retest this channel, which would be negative for the markets. And again, we should know by Friday morning at the open which way the markets and the VIX are heading. If you enjoy this content, please hit the like and subscribe button. It really helps to get this out to more viewers. Thanks a lot, and see you next time.